Welcome back, everybody, to the Schaefer Stock Market Podcast. I am Josh Soe talking to you guys again. I'm an editor at Schaefer's Investment Research. If you're new here, we do these podcasts once a week, trying to give you a quick breakdown of some stock market news and other things happening in the business world, whatever we are looking at over at schaefersresearch.com or anything I find interesting throughout my workday. This week in the stock market, the main focus has been the trade talks between the U.S. and China. For a while, those talks had been in the background. And of course, we have this extra little angle here with the NBA and then South Park getting banned in China. I never thought South Park would be mentioned in this podcast, but that is igniting these conversations about U.S. businesses working in China, China having control over what U.S. companies do. And that's just an interesting conversation that's sort of on the side here as the U.S. and China try to work out a trade deal. And of course, we have all these other headlines floating around. We had more news on the Huawei front suggesting that the Trump administration could ease some restrictions around Huawei. A lot of other mixed reports that a deal could get done, a deal might not get done, yada, yada, yada. We've been doing this all year. It's October now. I remember being in January talking about that we're not sure what's going to happen next with the trade talks. So that's where we stand right now. The Trump is expected to meet with some of the top delegates from China, some of their top people from their leadership. I can't remember who exactly he's going to sit down with on Friday, so we may get some news over the weekend. Of course, we have tariffs set to go in effect over next week, so that may be part of a deal there, maybe suspending those tariffs, but we'll have to see how it goes over the weekend. But as for individual stocks, I wanted to start this week with General Motors, GM. I wanted to start there because we have this strike, of course, with the union. The workers are on strike. They haven't been working for a few weeks now, and the meetings there continue to go on as well. Just today, we got headlines that GM CEO was meeting with the UAW leadership, so we'll have to see if any details come about whether they were productive at all. The last round of talks a few days ago, the union struck down GM's offer, saying that the talks took a turn for the worse. So we'll have to see if this round was any better. But I think this has been going on a lot longer than people originally expected for. And the stock has not recovered from the pullback, and even a longer-term pullback back in early August, between July to August. GM stock was up around $41 per share, but it's pulled all the way back to around $34 per share, which is a pretty big drop for a stock like GM. Back before the strike news hit, it was around $37 per share, so it has yet to recover from that. And we've been tracking the stock. Just this week, we wrote about GM and how options traders, at least just near-term options traders, were betting on more losses, a bigger pullback in GM stock with weekly put options becoming popular this week, but longer term, mostly call trading on GM. The 10-day call put volume ratio at the major exchanges shows mostly call buying, still staying popular, which would suggest that traders are staying bullish on GM despite this technical weakness during the trade talks between the UN and GM leadership. So that stock, again, continues to hold near those lows, but some options traders appear to be betting on a rebound in GM. We'll see if some kind of deal can get struck in the near term here. A lot of implications from this too, that this is stretching out much longer than people expected. I was reading a Fox Business article, and it was interesting to note how many other workers are affected by this outside of the union workers and just GM in particular. This Fox Business article I was reading discusses how, and this is according to the Anderson Economic Group, a consulting firm in East Lansing, Michigan. This number says that 75,000 workers at auto parts companies have been laid off or had their pay cut because of the strike. And that's extremely fascinating because that is the headlines I've been seeing. The biggest repercussion here from the strike is that these parts companies and even like the dealerships, whoever's looking for the parts for the GM vehicles cannot find them because of this strike. So 75,000 workers, according to the Anderson Economic Group, have been affected here by the GM strike. So that is a very large number, I would say. It'd be interesting to see if other firms have the same type of estimates, but I wanted to throw that out there just as something else to think about as well as this strike continues to go forward. Okay, next I want to talk about a couple stocks that showed up on our radar because of the short interest around them. The first one is Monolithic Power Systems, ticker MPWR. That stock came on our radar because Spruce Point Capital, which has often given out short positions, came out with a strong sell rating on the stock, and it's calling for a 75% to 85% pullback in Monolithic Power Systems, saying that there are a ton of red flags around the company and that many people who are hoping for a takeover or a buyout are, quote, wildly optimistic. So that sent the stock to multi-month lows, and this is interesting because Monolithic Power Systems, over the long haul, if you just pull up a 5-year chart of this stock has been very strong. It's rallied from around $40 to it got up to around $150 per share during that same time frame. So this is coming out with a strong sell on a stock that historically has been quite strong, and we noted here how options trading has been lining up here on Monolithic Power Systems, mainly with put buying soaring. The stock actually has an astronomical put call volume ratio of 143, so just all about put buying there at the major options exchanges, as bears just line up to bet on a pullback there in Monolithic Power Systems. So that'll be a stock to watch going forward. The other name I wanted to cover because of the short interest activity around it is QIAGEN, ticker QGEN. This stock has been hammered in recent months, falling from above $40 per share all the way down to around $26, $27 per share. It's at $27 per share right now. This is a life sciences company that earlier in the week, the stock got hammered, a huge bull gap there. The company issued a soft sales outlook for the current quarter, so the stock went to fresh multi-year lows, and short interest is extremely high on QIAGEN. So short sellers for a while here have been making a killing on the stock. Just in the last reporting period, a 19% increase in short interest. Short interest is at the highest point since January on the stock. So it would seem here that a lot of short sellers have been making a killing on QIAGEN's pullback here. Again, ticker QGEN if you want to follow that life sciences stock. It's in a lot of cool industries. And is an interesting company to follow, but the stock has been crushed in recent months. And that'll be a good transition into this next stock I wanted to mention, which is 10x Genomics, ticker TXG. That is another life sciences technology company that just went public back in September. The shares opened for trading in the mid $50 range, and they fall into $48 per share. But the stock just received some very bullish analyst attention, had Cowen and JP Morgan Securities come in. Cowen cited tremendous promise for the company and said that it likes the company's business model. So Cowen sees a lot of upside there for TXG stock, which again, it just went public in September. So I like noting those young stocks that just went public to maybe help get people some early insight onto these stocks before they hit the mainstream if they do have some upside potential. And another name also from the healthcare space that went public fairly recently is Livongo Health, ticker LVGO. This is a digital healthcare management company that will now be providing its services to everyone using the Federal Employees Health Benefits Program, and that is why the stock jumped this week and made a big upside move. It only began trading publicly back in July, trading almost as high as $46 shortly after that IPO, but it's fallen pretty hard since. But of course, this new deal breathes some life into the stock and is another young company to keep on your radar going forward. Speaking of names to keep on your radar, we just covered penny stock Rada Electronic, ticker RADA, and that stock was in focus because the company released a new orders update. It received $6 million in new orders, mainly for its radar systems, just in August and September. So that had the stock above the $5 level, which was interesting because we noted that there was heavy open interest at the October 5 call where traders were buying options, betting on the stock, taking out that $5 level, which obviously it did on this news. So some people got to jump on that move, but it's still trading only slightly above that $5 mark. So still a low priced stock that right now does not have many analysts. In fact, just one analyst in coverage on Rada Electronics. So a low price stock there to keep an eye on. A couple analyst notes here that I want to call attention to. The first one is on Uber that just got another buy rating, this time from Citigroup. And I wanted to mention this because, of course, Uber, I mentioned on last week's podcast, had another big analyst note with some analysts hoping for a path to profitability here for the ride-hailing company. So we had another bullish note this week, and this has been a trend lately. Aside from that bull note that I mentioned last week, there's been a few others here as analysts try to move in with the stock trading around $30 per share, obviously down from that $40 range where it IPO'd. So we have some bulls here moving in on Uber as it's at this lower price point. And the other interesting analyst note that I wanted to bring up was Craig Hallam's note on American Outdoor Brands, ticker AOBC. Craig Hallam upgraded that stock to buy from hold, saying that it's attractively priced at current levels. And it also mentioned that there's a few positive catalysts coming up, including potential gun regulation ahead of the 2020 presidential election. So that is an interesting angle there for gun seller American Outdoor Brands. Potentially more gun regulations as we see in the past, especially during Obama's presidency when there were a lot of talk about increased regulations on guns. Gun stocks flourished during that time. So Craig Hallam is seeing potentially a return to those same talking points and price action coming together to help American Outdoor Brands, which longer term has struggled. It was around, almost had lost half its value on a year-to-date basis during our write-up earlier in the week. So we'll see if that comes to fruition there for American Outdoor Brands, ticker AOBC. But I'm going to leave it right there for this week on the Schaefer Stock Market Podcast. I want to thank everyone who continues to listen. Our listenership continues to increase, and I could not appreciate it anymore. Wherever you are listening, subscribe and review. Give us a thumbs up or a thumbs down and let us know what we could do better. We're always trying to improve here. Otherwise, head on over to schaefersresearch.com to check out what we're writing about throughout the trading day. Of course, check out our free newsletters and all of our trading services. On social media, check out Schaefer's on Twitter, on Facebook, on Instagram. We're always posting stuff on all those, or just StockTwits. We're on there as well. But until next time, this is Josh Selway talking to you guys. I'll see you soon.